We move it upward, and now look, the upper external has come exactly into this same range, created a shadow, and has completely dropped down to the trend line. I hope you pay very close and careful attention to these issues and do a lot of practice on them, so that the support team can really help you in that area. Guys, these topics are all connected in a series, like a chain, and each time we move forward, we add one more link to the previous chain. So you must have definitely reviewed and resolved any issues from the previous session's material before watching the next session's content. You should fully understand the concept so that when we want to add a new topic to the previous one, we don't run into any problems. First, we need to learn the candlestick well. And after we've learned the candlestick, we should be able to learn the Kaldarar well. And after that, we should be able to apply half of the Kaldarar that we've learned. We draw trend lines, zones, and channels so that later we can move on to breakouts, pullbacks, and so on. You'll see that all of these are interconnected, and this is a chain that leads us all the way to a successful trade. Finding a channel in a sideways trend. It's the same way when we have two peaks and one valley, two adjacent peaks and a valley. To the trend line, the zone is simply copied down, just like the trend line. It's been copied and placed on the second point or the same valley, exactly in the same way. We want to get some confirmations and strength from our trend. How does it work? We say, for example, this trend segment that we drew with two peaks and one valley for a downtrend, and with two valleys and one peak for an uptrend. Now, when the candles come back and touch it, to these lines that we've drawn, and the price action shows them, and we see their reversal and pullback from that area. In fact, they're giving us confirmation that this line is very accurate, very strong, and has been drawn correctly. The first touch of the drawn trend line and the price action on it is indicative. Pay attention to confirming the trend line. The more touches there are on this line, the stronger the trend line is. Let's look at this together on a chart, and also discuss what we expect from the touches on the trend line. Guys, here's another golden tip. Remember this. Usually the third touch on the trend line gives us the biggest reaction. Take a look. It is expected that with the third touch on the trend line, the price will show a sharp move in the direction of the same trend. For example, look, friends, as we said, in an uptrend. When we have two valleys and one peak, we can draw a trend line based on those, right? We've drawn a trend line, and now for confirmation and strength from this point onward, when the chart reacts to it, that is, when it hits our trend line and bounces back, it counts as a confirmation for us, showing the strength of our trend. And this reversal, in a way, this was the first touch, this was the second touch, and here we are witnessing the third touch. Generally, they call it a touch registration on the trend line in technical analysis. It's always a sharp move. We expect it to move in the same direction as the trend, and when it comes here and we see subsequent touches, it shows the strength of our trend. Of course, friends, keep this in mind. If in any phase where it touches, it goes up less than the previous high, it means that gradually the strength of this trend is decreasing. And from that point on, with the factors we observe together, we should gradually start expecting a drop, or at least a correction from this trend. From this trend that has been going up, we should take this into account. Now let's get back to our main topic regarding confirmation, and we talked about the strength of the trend. So we said the best method is when there are more touches on this line, which indicates its strength is evident when the highs are getting significantly higher. But if the highs are rising less and less, it indicates that the trend is gradually losing momentum. And what should we expect from the third touch of the trend line? Always remember that the third touch usually results in a sharp move. That's what we expect. All right, in the next slide, we see that we've brought in several examples. And we'll review these confirmations and strengths using these examples. For example, here you can see that this is the first touch and the second touch is here. This is the second touch, and here in this area is the third touch, where we see a sharper market move, even in this very small area. First touch, second touch, and the third touch with this area, we saw a sharper reversal move. Now here we said that more touches mean more confirmation. These together formed a third touch, which resulted in a much bigger drop, as I said. When a zone is tested frequently on the chart and the price gets closer to it, from the previous page, this shows that a trend is about to be broken. I talked about breakouts. All right, let's go. Let's see what exactly a breakout means and how many types of breakouts we have. We'll review the different types of breakouts together, and we'll focus on the most important one in our method. What are the types of breakouts? The first type of breakout is a breakout with a shadow. What does that mean? It means if we have a trend here, right? And we draw a trend line relative to it. And when the market starts, our trend is broken by a single candlestick, meaning with just the shadow of one candlestick, it goes below the trend line. This is commonly referred to as a breakout with a shadow, or with the same shadow. What's the second type of breakout? A breakout with both shadow and close. What does that mean? It means that a candlestick has both its close and its shadow here, below the trend line. But the most reliable type of breakout is the breakout with two closes. What does that mean? It means that this close is confirmed here, and then another candlestick comes and its close is also confirmed here, meaning below the trend line. So we have two closes. This is considered the most reliable type of breakout. What does that mean? Let's look at it together on this chart to see what valid breakouts look like. Here there was only a shadow, you see? Here there was a close, but then it returned to the range, and again here it formed a shadow. Here is where two closes are confirmed. After that, the market drops. Right here, a close has occurred. Here, the second close happened, then it reversed and changed the trend. Or right here, two confirmed closes, and the trend reversed. These are just a few examples we can keep in mind. What does two closes mean? There's a term in the market called pullback, or in more colloquial terms, that's what we call it. The farewell kiss with that trend, what does it mean? It means when the market chart breaks a trend for us, if it takes it back, it means the trend is bullish. With its breaks, we become alert. Two closes happen, the trend is broken, we have two closes, and now the market tends to reverse. It wants to test this trend line one more time, but this time from below to try it out. The first return toward the broken trend line is called a pullback, maybe in some pullbacks. We might see that it doesn't even reach the trend line itself, but it's still the first return. You only count this as a pullback, and after that, the market should move in the direction of the broken trend, right? Let's see. Here it's written. A pullback is famously called the kiss goodbye. That means in Forex, crypto, commodities, wherever, I don't count the term kiss as a technical term, just so you know. It means the same thing for Forex pairs, commodities, any market we work with. It's for getting ready for an upward or downward move. It strongly returns to the line. It hits the trend line that was drawn for it and then returns to the trend it has taken. So if it breaks the upward trend, it goes. In that direction, it does a goodbye kiss or a pullback and then continues in the direction of the drop. Or if it's in a downward trend and breaks it with two closes, it might come back to test that area again, the one it broke, and after that, continue upward. In other words, a pullback. It's a situation where the price returns for the last time to the area it was previously in. And it touches that area. All right, let's go and see this topic more clearly together on the chart. Friends, what kind of trend do we see here? We see an upward trend in this chart. As you can see, the first touch, the second touch, the third touch, these reactions confirm our trend line. Here, our trend line is broken and there are two closes below it. After this breakout happened, you can see that the price came back again, touched our trend line one more time, made a pullback, and then continued in the downward direction it had taken. So this is my trend line. Here we see the trend line break, and here we see the pullback to this trend line. Now there's a concept called support and resistance. Let's see what support looks like. Let me give you a simple example, guys. For instance, imagine a two-story building. Right now we're standing on the first floor, there's a ceiling above us, and there's another floor above. It's the same here as well. What does support mean? It means, for example, if we have a dodgeball and we throw it to the ground, it starts bouncing back up. That means the floor acted as support for us. It didn't let our ball go any lower from here. It supported it and bounced back. And if we throw it hard, it hits the ceiling and the ball comes back down again. At the bottom, it means the ceiling created resistance for us, right? So now we're familiar with the basic concept that support and resistance work like this. The floor is supporting us and holding us up. But if our ball goes up, the ceiling acts as resistance and causes the ball to bounce back down. Now, in its theoretical definition, a support level is a price point that holds special appeal for buyers, and when the price reaches this level, we see an increase in demand, and this rise in demand leads to higher prices. In fact, at this level, the amount of demand exceeds the amount of supply and it overcomes it. And the result of this victory is an increase in price and the continuation of our upward trend. Just like, for example, the third touch we mentioned, in the direction of the trend, it touches the trend line and the trend continues. What about resistance? These are levels that are particularly attractive to sellers, and when the price reaches this level, traders engage in heavy selling. In fact, at these levels, the amount of supply increases compared to demand, and this leads to a decrease in price and the continuation of the downward trend. Exactly like the example I gave with the 7-stone ball, when it hits this bottom and wants to go up, a wave of demand is created, pushing the price upward. But this structure is attractive to sellers. When it reaches that area, it starts to drop again, meaning supply overtakes demand. In this context, there's a concept called turning lines into axes, meaning any support level can, after being broken, turn into resistance, and any resistance after being broken can turn into support. Let's go back. In the example we discussed in our session, we said there are 2 floors here. Now imagine that when we hit the ball, the ground was our support and the ceiling was our resistance. Now imagine the ball goes up with such force that it breaks through the ceiling, which was its resistance, and reaches the floor of the upper level. From now on, our ball is on the upper floor, and if this ball hits the upper floor's ground again, that floor is now support for it, it's no longer resistance. Because it broke through once and now it's above it, it becomes support and supports it. The next resistance is the ceiling of the second floor. Let's move on to an example to see the lines in a neutral trend or in our trend line in pullback areas and in price reversal areas. We can see the transformation of the lines. Guys, look here, in a neutral trend, when we connect these 2 bottoms together, we see that when the price hits it, it creates support for us and pushes the price back up again. But when the price breaks through, a breakout occurs. This support line turns into a resistance line, and during the pullback, why does the market start moving in the direction of the trend again? It goes down because that support line is no longer called a support line. Now it's become a resistance line. Meaning if we want to change its color, up to here it was blue, acting as support. From the point where the breakout happened, we now see it as a resistance zone, and the concept of a pullback basically comes from here. When the breakout happens, it tries to go back up, but now it sees that this line is no longer support, it's resistance, and the price continues in the direction of the trend. It drops. Here's one example, and we'll look at another example together here. You see, guys, this is an upward trend line. You can see the price touches it, bounces back, and it acts as support. We're witnessing support exactly, up until the point where the price comes and breaks through it. So what was the role of this line up to this point? It was support. Now, as I'm showing with the blue color, from the point where the breakout happened, it's no longer considered support. Here it's forming a pullback. It comes back, and this line that had been acting as support until now, every time the price touched it, it would push it higher. This time, when the price hits it, it acts as resistance, and the price drops from there. So from these trend lines we've learned, and their breakouts, as well as with channel lines, sometimes we can make certain trades. For example, with the confirmation of a trend line, with the breakout of a trend line, with a pullback, and so on. With channel lines, here's a point I've written down for you. For trading, we need to determine the main time frame. The main time frame is the one in which we draw the trend line. So what does that mean? It means we go to the main time frame. For example, we've chosen the 1-hour time frame, and we draw the trend line there. But for trading on a lower time frame, we get confirmation on one time frame lower. We look for the same breakout and so on, but on a lower time frame so that our stop loss becomes tighter. There are some points and tricks we don't know yet. On that same H1 time frame, we wait for the breakout and pullback, and the trade should be made on H1 if it breaks cleanly and comes down. But where are its setups formed? On a lower time frame. We get confirmation on one time frame lower, and we can trade on M15. For example, here we said if our reason is the trend line, we draw it on the time frame. We get confirmation on the H4 time frame, and we enter the market on the H1 or 1-hour time frame. I've prepared this on a slide. Are we seeing it together here? Look, friends, here we have come and we selected 2 peaks and 1 trough, and we connected these 2 peaks together. We extended it, and it became our trend line, right? Our trend line, then we copied the trend line and placed it on the trough in between, and it became the channel line. Then from the body edge of the same candlestick that we used to draw the trend line, we drew another line. This became the zone. We copied this same zone and placed it below, and it became the lower zone of our channel, right? Now, where can we trade? When it touches the trend line, or that same touch. The third one, which is very important, has a single tradable opportunity. What's another way to enter? We say that the price is moving within this channel and touches the edge of the channel. When we see signs of a market reversal, again, we can trade up to here, up to the edge of the trend line. That's one trade. Our type of breakout is with a pullback. Here, when we saw two closes and the breakout happened, when it pulls back onto our trend line. Here, this gives us a very good level. This very structure in the direction of the trend that it's about to take allows us to be in the market. So with what we've just discussed, we can have three types of trades. One inside the range up to the channel line itself. Two at the trend line touch in the confirmations. And the strengthening of momentum, three, with breakouts and pullbacks. Let's keep these three types of trades in mind theoretically here, so that in the next session, when we talk about how to buy, how to sell, and how to set pending orders, buy setup, sell limit, buy limit, we will discuss everything thoroughly and go over all these topics completely inside MetaTrader. We'll work with them directly on the chart and easily get the hang of how they work. In the next session, stay tuned to learn how to place market orders, meaning entering a trade instantly. Whether the market is moving in the buy direction, the sell direction, or even if we want to customize our trades and place orders as limit or stop, we'll be able to do it. We'll see exactly how it's done. In fact, in the next session, we also want to see how to set stop loss and take profit automatically. How to set them on our chart. Welcome to the future.